What my 1 billion in commercial real estate experience is telling me about the economy. I've collected data from my commercial projects to get insight on what's going on in the economy. This is some of the best boots on the ground intel that you can get, and you won't believe the trends. I think right now the economy has a lot going on. Historically and in recent decades, we're roaring. On the big picture, we're doing great. However, as of today, there's a lot of uncertainty in the market. As we know, the creation of tariffs and federal reductions going on with Doge could be a blessing in disguise, or they could be a curse. Why is that? Because whenever you have massive change, and that's what this is a period of massive change. If you're trying to change federal government by 10, 20, 30%, that's a massive change. However, the team that's in place now is looking at 50, 60, 70%. That change is unprecedented. In the long run, it might be much needed to bring down the federal deficit and wash out how we're thinking about things. However, on the flip side, we're also doing things in a really quick, sporadic nature, letting a lot of people go, dropping departments that may or may not be vital to the operations of our great nation. And so all this change, whether you're for it or against it, I'm not going to comment on that. I'm just going to make the point, whenever you have this much change, you're going to have a ton of volatility. And now that volatility can be a good thing and a bad thing, both at the same time. All right, so look, starting with interest rates. From 2011 to after COVID, interest rates were on a trend going as low as we've seen them. As the interest rates dropped, asset bubbles grew. The rich got richer. Why? Because they had cheap capital to keep doing their same strategies. When I was buying a Walgreens before with a certain cap rate and a certain debt, this was one thing, but when my debt costs went lower and I was still able to buy that property, it created more equity and wealth, simply stated. Then interest rates started fluctuating because post-COVID, man, it was scary for several months. You had another little dip in the economy because we all stayed inside for a few months. In some regions, stayed inside for 2 years. But once we came out of it, tourism, travel, spending, moving to different states like Florida, unprecedented change, unprecedented spending, because all that money from the stimulus checks and from people being that all got flooded into the economy. So then what happened? Inflation shot super high. Then what happened? The US government realized this inflation is bad for business in the long run. It's actually very dangerous. Therefore, drove the interest rates up. Then interest rates shot up 7, 8%. Now interest rates have fallen back down to a little bit of a normal level. There's some argument that a lot of people want interest rates to go low again, including our current administration. They want to bring interest rates back lower. And maybe there's an argument that current 6% isn't actually that bad relative to the 80s when they were in the upper teens of an interest rate. With that said, the interest rates matter, whether they push back up or whether the federal government brings them down. They bring them down, we're probably going to have a lot of volatility. We're also going to have more economic growth. But what's that growth going to do? It's going to create another asset bubble, because as debt gets low, asset values get higher. And we've already been trending up since the Great Recession. Recovery 11, 12, 13, it's just been trending up at an unprecedented level of asset growth. Well, technology is a new thing. The speed of information, the rate of growth, the rate for someone, before it would take a big business 10 to 100 years to grow. Now a business can grow with the speed of the internet, 1, 2, 3 years. The ability to create wealth from entrepreneurs used to take a lot more time than it does now because of the speed of information. So that's interest rates, that's information. What else is going on with the economy? If Doge is going to come in and wipe out half the federal government, that's going to be a lot of commercial property that's going to flood the market. How many businesses can and will absorb those spaces? The federal government is the largest organization in America by a lot. It's not even close. You can combine the top 10 next largest businesses, and it's still a fraction of the US government. So if you cut the US government in half, that's going to be a lot of space. Who's going to take that space? If there's too much space, think about supply and demand. Too much supply, your demand's not going to grow, prices are going to drop. What's the biggest asset the federal government controls? Office space. So if office market plummets, all the big REITs, pension funds that own all these office towers across the country, they're all going to have problems. If they're having problems and they're holding all your money in your retirement, who knows what's going to happen? By the way, there's banks lending on those assets. There's property in San Francisco that's really infamous. It was $1.5 billion asset. It went to like 200 million in 2 years. Well, the debt on that thing was probably 600-700 million. So the debt got crushed by 300-400 million. All that equity on top, gone. Whose equity was that? Well, some of it was the developers. The first 50 million was probably a large development firm, but all the other equity, that's your retirement funds. That's your IRA, that's your pension funds. All that institutional money all just got zeroed out. Now, those institutions own a bunch of different assets. So that's why your account didn't go to zero in your retirement. but it did take a hit while other parts of the economy are growing. So that's in the commercial office space. What are some other things that we're going to have challenge with in the future? The rate of innovation and the use of technology and AI. Will we really lose that many jobs because of AI's growth? I will say that I'm impressed, skeptical, and concerned at the same time with the rate of AI growth. It does seem like it's happening fast. It does seem like the federal government, I don't like the government regulating a lot, but we might want to keep an eye on this one because if it happens too fast, I think what Sam Altman was famously quoted as saying, with AI, it might be the end of the world, but we're going to have a lot of great companies until then. When I saw that from one of the forefathers, I had to think to myself, like, this is really concerning. On the flip side, even I am now using it to write letters, to proofread emails, to solve complex problems. I have two $17 million loan packages I'm analyzing. I literally went in and started typing the two differences in the loan and asked it to analyze it. Before, I had to use a spreadsheet and then work with my team and do all these different things. Now, all of a sudden, the point being is if AI is changing that fast, think about the other sectors and all the R&D happening behind the scenes. So what does that mean for employment? Is it possible that if a third of the economy loses their jobs to AI, like what are those people going to do? On the flip side, Elon Musk is shouting that it's going to create infinite wealth and prosperity for everyone. And there's high probability that happens as well. But the underlying point, we don't know. So move that back to your investor hat. How aggressive do you want to be given all that uncertainty? Well, think about the fundamentals. Fundamentals are diversification. I personally have a lot of money invested in small cap enterprises. What does that mean? Commercial properties, real estate, small businesses, and a smaller portion of overall net wealth liquidity in things like public stock markets. Well, if you talk to anyone that knows anything, they would tell you should balance that out. I elect not to because I'm an aggressive entrepreneur. But for the most of the audience, you should strongly consider diversifying your portfolio, especially now in times of uncertainty. For a lot of people that are only in the stock and bond market, that means checking out other asset classes. Should real estate be a part of your portfolio? Yes. Should some Bitcoin and alternative investment be a part of your portfolio? Likely. Should you even go as far as to say, geez, could I buy a laundromat, and run that? You probably could. It's actually not rocket science, but you're gonna have to recognize that you're gonna take a large portion of what might be your wealth or a small portion, and you're gonna put it into that. Don't forget, that takes time, expertise, and focus, which you can learn, but you're gonna give up time from other parts of your life, which leads into the strategic framework thinking. Think about what you're good at, what you like doing, and then put all the different opportunities next to it on a chart. Study the similarities in what you're good at, what you like, and the opportunities. Then go and value your time. In the last 3 years, my tax return said I made this much. I divide that by the hours I worked. Therefore, that's the value of my time. Anything below that, maybe I should outsource or partner on, but I want to focus on how do I do a better job with my use of time in order to lead my business, lead my team, lead my projects into the future. All ships rise with rising tides. So be smart about how you structure your deals with your partners, with your vendors, with your team. Create value for everyone, capture a piece. Pigs get fed, hogs get slaughtered. What does that mean? It means leave some meat on the bone. Don't be greedy. Enjoy having some wins along the way. As you're thinking through that and you're thinking through where you want to play, go back to what you like and what you're good at. Because if you're working on something that you're passionate about, you're more likely to have success. For me, I've always liked urban markets. I grew up as a surfer in Daytona Beach and had plenty of beach, plenty of sand, plenty of sports, plenty of outdoor daytime work and different things. But I was fascinated in metros. So when I went to college, I came to downtown Tampa and I lived in downtown Tampa because I thought it was a cool city with opportunity for me to work and grow and learn. I wanted to learn about cities. Then having lived in New York and traveled around the country and around the world, I fell in love with urban cores, urban culture, art, vibes, lounge music, whatever it is, history, the unique cultures that come with city centers, people, public transit, all that packed in. So for me, I elected to spend a lot of my professional time focusing on projects like Ybor City in Tampa, historic Springfield, downtown Jacksonville, working in Midtown Manhattan, bringing Manhattan businesses to Florida, bringing Manhattan money to Florida, working on that interconnectivity of the overall market, because those were things I found interest. And then I started liking that because that's what I found interesting. Then I started studying more, and then I became an expert on it. And then all of a sudden it was the things I liked, the things I was good at. And then from there, I started saying, okay, I want to bring money to 2 projects in urban Florida because that's what I like and that's what I'm good at. However you go on your journey is up to you. But if you focus on those principles, what do I like? What am I good at? And how you create value, then tie that into the overall economy. All right, there's a lot of change coming. What am I going to sit back and anticipate? If you anticipate something is going to happen, you're probably right. So then you need to ask yourself, who else is acting on that information? If you think long and hard about those different changes and what you're good at and what you like doing, you can come up with an idea that can change the world. Heck, it only has to change a tiny percentage of the world and you capture that value. Real estate, businesses, arts, culture, consulting, whatever it is, doesn't matter. Just focus on those principles. So in all reality, a lot of change creates a lot of opportunity. How you pursue those opportunities is up to you. But I have a whole lot of other ideas on businesses, developments, projects, and how to share these ideas. If you want to learn more, click subscribe below. And if you have questions or comments about anything we talked about today or in your business ideas, drop those in the comments. And I'll personally get back to you. I look forward to seeing you on future episodes.